So here's the big question. Is your crypto portfolio just a bunch of lottery tickets, or is it a serious wealth-building machine? Today, we are going to make sure it's the latter. We're cutting through all the noise, all the hype, to build a real, structured plan for your crypto, one that's designed for long-term wealth, not just gambling. All right, let's get into it.
And hey, let's be real for a second. Take a hard look at your portfolio. Does it kind of look like a random collection of coins you heard about on Twitter or TikTok? You know, a little bit of this, a little of that, all bought on pure hype and a prayer? If you're nodding along right now, don't worry, you are not alone. But we have to call it what it is. That's not investing. That's basically just pulling the lever on a slot machine and hoping for the best.
And here's the tough truth about playing that game. A staggering 90% of portfolios that are built like that, they eventually go to zero. And it's not because of bad luck. It's not even because you picked the wrong coins. It's because they were missing a system. And today, we're going to build that system.
Okay, so before we jump into the solution, we have to really understand the problem. What is the single biggest mistake that just sinks most crypto investors and keeps their portfolios in the red? Let's break that down first.
This quote, "This is everything." It absolutely nails it. You don't get wealthy by pure luck, by finding the next Dogecoin a month before anyone else. No. You build real lasting wealth by creating a smart, solid structure for your investments. A structure that can handle the wild swings of the crypto market. Your system is so much more important than your individual picks.
So, what does a winning system actually look like? Well, it's this really elegant, really powerful strategy called the 60-30-10 framework. Think of this as the blueprint that's going to turn your portfolio from, a chaotic mess into a disciplined wealth-building engine.
The real beauty of this whole framework is just how balanced it is. It's specifically designed to protect your downside with a solid, reliable foundation, while still giving you a shot at crypto's massive upside potential. You literally get the best of both worlds, real safety and explosive growth.
Okay, let's get into the nuts and bolts here. 60% of your portfolio, this is your rock, your foundation. We're talking 40% in Bitcoin, digital gold, and 20% in Ethereum, the engine of Web3. The strategy for this bucket is simple. You accumulate and you hold. That's it. Next, 30% goes into what we call growth. These are your promising but established projects. Think Solana, Polygon, Chainlink, real sector leaders. Finally, and this is key, only 10% is for pure speculation. These are your meme coins, your moonshots, and you have to go into this bucket expecting most of them to fail. That's the mindset.
All right, now that 30% growth bucket, that's where things get fun. But you can't just throw money at any 6 cool-sounding coins. See, real diversification isn't just about owning a bunch of different tickers. It's about owning things that won't all move in the exact same direction at the exact same time.
So what this means is spreading your bets across different sectors of the crypto world. You want some exposure to the big smart contract platforms, right? And then you want some in DeFi, which is basically the future of finance. And you can't forget infrastructure plays, the picks and shovels that make the whole ecosystem work. This is how you avoid that classic trap of owning 10 coins that are all secretly just different flavors of the same idea.
Now, just as important as what you buy is what you limit. Any single holding in these super high-risk categories, it should never, ever be more than 5% of your total portfolio. This goes for stuff like algorithmic stablecoins, which have a really nasty history of, blowing up spectacularly. Think of these as the hard and fast guardrails that are going to keep your portfolio on the road and out of the ditch.
So you've built the perfect portfolio. Awesome. Now comes the hard part, actually managing it. This is where almost everybody stumbles, whether you're new to this or you've been around for a while. It really all boils down to mastering 2 things, rebalancing and taking profits.
Rebalancing is like your secret weapon for automatically buying low and selling high without letting your emotions mess things up. So let's say Bitcoin has a huge run, and suddenly it's 50% of your portfolio instead of 40%. You simply sell that extra 10% and you put the profits into your other assets that are lagging behind. You can do it on a set schedule, like every 90 days, or you can do it whenever an asset gets too far out of line. Either way, it's an incredibly powerful habit. Now let's talk about something that's really hard for a lot of us, myself included, and that's falling in love with our winners. We see a coin go up 10x and we start dreaming about it going 100x, right? We get attached. But you have to remember this. Taking profits isn't some kind of betrayal to the project. It is the entire reason you invested in the first place. The goal here is to improve your actual real life, not just to have the highest score on a screen. And here is a brilliantly simple way to do this. It's called the free ride strategy. It's so easy. Whenever any single investment doubles, it goes up 100%, you sell half of it. That's the whole rule. You've now taken your original investment completely off the table. It is literally impossible for you to lose money on that position now. The rest is what we call house money. It's pure profit that you can just let ride completely stress-free.
All right, we've got the strategy, we've got the rules, let's talk tools. Because a great system isn't very useful if you can't easily track it and manage it without, wanting to pull your hair out.
Look, you do not need anything complicated for this. Free tools like CoinGecko or Delta are honestly perfect for just keeping a simple bird's-eye view of your portfolio and making sure you're sticking to that 60-30-10 plan. And trust me on this one, when tax season comes around, a tool like Coinly that gets everything organized for you, it will save you from a massive, massive headache. And here is a simple rule of thumb that will keep you sane and profitable. Glance at your portfolio weekly just to see what's up. Analyze the big picture, maybe once a month, but only make your actual rebalancing moves once a quarter. Checking your balance every single day is a guaranteed recipe for making panicked, emotional decisions. So just make a schedule and stick to it.
So, I'm going to leave you with this question. Is your portfolio just a lottery ticket you're hoping cashes in one day? Or is it a tool? A tool that you are intentionally using to build a better life for yourself? With the right system in place, you can absolutely make it the latter. Thanks for tuning in.